Put the spotlight on real estate, actually. We've got Raymond Realty's first project in Mumbai. Let's talk about that and the roadmap for projects that are lined up. Harmohan is the CEO of Raymond Realty, joining us on the show. Thank you for taking time out. Given that the real estate arm is a relatively new vertical of the Raymond Group, take us through the growth, the kind of milestones you've seen since inception in 2019.
So the business, like rightly said, is since 2019. So it is now in its fifth year of running. Uh, from the inception, let's say the last 3 years trajectory, because the first 2 years really went in setting up the business and getting the project going. If you see the last 3 years, the turnover was about 100 crores 3 years ago. And the turnover that we will be reporting in March will be significantly higher. Of course, I can't give out the exact number because we haven't heard the results yet. But if you want indication, the year before that, March 23, we reported close to a 1,500 crore turnover.
You've recently forayed out of Thane and launched a project in Bandra as well, the address by GS in a JD model. The first phase of this project, I believe, has already been sold out. What's the way forward? Tell us a little bit more about and the kind of revenue potential that you foresee.
Yeah, so the Bandra project is our first foray outside of Thane, and it has been extremely well received in the market. The brand has proven itself once again that it's not just Thane market which has accepted Raymond as a real estate player, but even in Bandra, which is queen of suburbs, very, very strong, deep market, very discerning customers. There also, we've had great success. Like you rightly said, that the project has been fully sold out. And the first phase, we are launching one more building as we speak, and we will soon, at the end of the year, launching the second phase as well. When we had got the project, the total turnover of the project projected top line was 2,000 crores. We will be definitely doing more than that because of the market response that we have got. Pricing is stronger than what we had expected, and the volume has also, kind of positively surprised us.
You own 120 acres of land in Thane. What are the development plans there, and what would be the average ticket size for projects there to be?
We have got one product called 10x Habitat, which is primarily a two-bedroom community product. Then we've got 10x Era, which is a two-bedroom and three-bedroom community product. And then we've got Address by GS, which is a three-bedroom and four-bedroom. Primarily, I mean, there are some projects we might do limited number of two bedrooms also over there, but it's a high-end, more premium product. And then we've got top of line, which is luxury, which is Invictus by GS. That's the other product. So between these four products, we are trying to play this game. And everywhere we go, we will try and see if we can put the market segmentation in these. And if there's a need tomorrow, we can create one more product in this portfolio. But essentially, that is what we are trying to do. So to answer your question squarely, in Thane, now each product has been launched in Thane. So we've got 5 projects going on in Thane. We've got one Habitat, one Era, 2 of Address by GS, and one Invictus. So this is a good laboratory for us where we test out all these products, and each one has been very well received in the market.
Okay, there are 2 more projects as well in the pipeline that we understand will be launched over the next few months. Sahni and Mahim, tell us a little bit more about the revenue potential and what are the completion.
So our current strategy outside of Thane is primarily based on JDA model. While we have not ruled out acquisition of land, but that's not our preferred choice. So all these 3 projects, whether it is Bandra, Mahim, Sahni, they are all on joint development model, either a society redevelopment or a Mada redevelopment, or we are even open to looking at SRA projects on a selective basis if the risks are kind of mitigated in those. So yes, the preferred model is joint development model, and all these projects are under the product portfolio of address by GS. They're all premium products. They're all going to be, 30 to 50,000 rupees a square foot kind of pricing.
Right. Your Q3 revenues, they've already grown 50% on a year-on-year basis. What should the street pencil in for Q4 and FY24?
Well, what we have talked about in the investor community and public at large is that we are committed to deliver over a medium term a 25% CAGR on the top line and the bottom line. And I can tell you with confidence that we are on track as far as that is concerned. It will be difficult for me to give a specific number for Q4, but it will be a good growth. It will be better than industry growth that you will see from us this year also as compared to last year.
All right, thank you for sharing with us a little bit more about your foray into the real estate market and what exactly that implies, Raymond.
If you like this video, then like, share and subscribe to ET Now.